Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, August 12th, 2007. Yeah! Come on! How are you? S&P 500 daily in front of you. Very extremely volatile week. It's been, pretty much a whole volatile month in the markets here. But this week the price swings were just really major. It was a Fed week. Tuesday, August 7th, FOMC decision on rates was to just stand pat. This was here on the 60-minute charts right here. This is the Tuesday afternoon in question. We did bump a little bit higher here. S&P broke up to the psychological 1500 level. However, if you look on the dailies, right, it's just right to the 20. 20 MA smacked it down hard. What I found interesting about the trade this week was that this action here, which was, this is actually last week, August 3rd. This is Friday here. Then Monday we had kind of a very bullish reversal. This is Friday, August 3rd. This is Monday, August 6th. These sort of V-shaped reversals here, I would have completely expected would have just went to the side here and then maybe even broke higher. But the fact that we broke down so hard here on August 9th is indicative to me that the selling is not ready yet to abate, basically, that we could see some more bearishness further on because we didn't get the usual, V-shaped hard bounce. This is a major piercing pattern here, I would say, right? This is quite bullish when you take back that much of a move, but apparently it was just sort of some sort of short covering or whatever because markets got smacked right back down again, and then although the S&P didn't make a lower low, right, and it was kind of strange because we took out a swing high here, the Dow did make a lower low, right? And broke down below it. NASDAQ, however, did not. So that's also the next thing I want to talk about is that even though I'm quite bearish in the bigger picture, there's a lot of mixed signals here. I mean, just starting with the S&P on a weekly, we're basically at trendline support still, right? And right now what we need to see is this going to turn into a bear flag, like a pennant, which would break it lower, or are we going to bounce from here and turn around higher? Dow Jones Industrial Average, same thing. It doesn't even have trendline support yet. We could move as low as 13,000 and be here, or through the bodies, or if you want to do it just to the bottom of this shadow here, right? That's 12,783. So that's got a little bit of a ways to go. NASDAQ Composite, zoop, right at it, right? Same thing as the S&P, right at the trend line. The clear winner this week was the Russell. Small caps kind of rebounded big time, and that's another thing that I think is basically adding to the dare I say confusion? Confusion! Here come the drums! Right? The mixed signals, so to speak, where you have some of these indices just slightly stronger or weaker than others, and these small caps definitely making the same rebound that the rest of the markets made, making a swing high here, but at the same time, after they made that rebound, notice here, no fall down. No fall down in the Russell. This August 9th here, if you recall, this is August 9th in the S&P 500, right? Obviously, what's the dilly with that? Financials, basically, right? I mean, these are the small caps, so you don't have the banks, the insurance companies, and the financial stocks inside of here. So these got smacked a lot less with all of the subprime news, et cetera, et cetera. So the Russell might be one bright spot here, okay? So we're at trendline support in some a little bit above, some a little bit below. Question is, do we get a bear flag on the longer term charts, such as these weeklies, or do we bounce back up? We shall see. One thing that would tell me that I think we go lower is essentially what I've been seeing in the market internals. We've been having extremely weak breadth readings. I'm going to show you a chart here of the breadth ratio that I use, right? This is the S&P 500. Let me put a daily, I guess. As we started selling off here, notice that as the market backed off in this area and then it made its high, this is the record here in the S&P. This is the 1555 to 1560 area, which was higher than we've ever been, right? As we were making these, constantly higher highs and the market was okay, even here as the market, it looks as though the market failed, right? Which it did for a second. You stopped making a higher high here and then you did. Notice that the breadth was still picking up. The breadth was diverging positively, all right? As the market's kind of bumping here, people are still buying this thing. And then they make one last push, and then what I want to point out is that as the market started crashing here, basically starting on July 20th, right? This is when you started to see the breadth. See if I can put a vertical on it for you. Boom. This is when you started to see the breadth really make lower lows, right? Oh, I'm sorry, that's not going to go all the way down through. Never mind. I thought we'd have a vertical line all the way through to here, such as these, right? I can move these actually, right? Look at here. These will line up. See what I mean? As we started breaking down lower, what this number is essentially is it's the volume that's flowing into up stocks, the up volume, over the total volume. So if that number's at 50, you're at parity, right? And that's the green line here in the middle. If you're at 50, then there's equal amount of pressure in terms of up volume and down volume. If this number gets higher than 50, then it's in the bull's favor. If it gets lower than 50, it's in the bear's favor, right? And anything basically under 20 is quite bullish, and above, say, 70, 75 up here is quite bullish, basically. Quite bearish on under 20, quite bullish over 70, right? Well, as soon as the market started coming in a bit, notice that these numbers got really, really weak. You saw readings even as low as in the single digits. Here, I think was here and here were the weakest I've ever seen. The readings were like 4 and 7 or something, respectively, and there was a lot of like sub 20 readings. So basically, what that's telling me is that the sellers are out in full force. We've also had extremely weak AD lines during this time period. Look at my AD line here, right? Look at the ticks down here. Had a number of minus 2,000 days. That's rare. You don't really dip down below this 2,000 area that often. This is the New York Stock Exchange advanced decline line, number of advancers versus decliners on an intraday basis. Look at this, like Thursday, Friday, sub 2K, sub 2K, right? So basically, looking pretty weak out there. Let's take a quick look at the VIX before we wrap it up. BIX, as my girl says. Weekly, I think still got room to move, right? Huge explosion in volatility in these last couple of weeks. I remember we were talking about a 10 environment here. Then we said, hey, is 13 the new 10? Well, guess what? The VIX almost hit 30 here on Friday's action, I believe, right? Yeah, we almost touched into 30, 29 point something. Yeah. Look at the monthly. I think we still got room to move. What do you guys think, right? There's no reason why this volatility index can't move to 35 when you're doing 40 to 45 point swings in the SPX, right? Look at the daily. I mean, this is the type of market it is right now. And one of the things I want to leave you with definitely is to say that the movements in this market are so big right now, so violent, the volatility is so big that if you're playing the swing trading game, which is the 2 to 5 day roughly, maybe 3 to 7 day, whatever, buy and hold or short and hold, that type of swing trade play, be very, very careful out there. This is the type of market that is, quote unquote, like it's doing it all in one day. You know what I'm saying? Like, look at this day here. I mean, you moved down from high to low in the S&P here, say from 1473 to 1432. So it's basically 40 points, right? Now, let's say you had closed on that day right there, right? Well, would you have ever thought, say, 6 or 8 months ago, if this high here was 1473, let's say you were an options player or something, whatever, let's say you thought to yourself, well, this is a perfect area for me to initiate some sort of a bearish call spread, or whatever. So I'm going to put a short vertical up here, and you would be playing you would be thinking to yourself, well, it's not going to go there, right? I mean, what are the odds that we retrace that, right? Well, look what the market did. I mean, it's amazing. I mean, within a day and a half, it retraced that. And then you're moving to this area, and you're touching the 1500, right? And then, by all intents and purposes, you're probably asking yourself, well, how long is it going to be for the is the market coming back to here? Well, yeah, bam, in one day it is. So it's just a huge amount of volatility. Be very, very careful out there. All right, just to wrap it up, few mixed signals out there. Let's leave it on the S&P Weekly. The big question is, do we make a bear flag here or do we bounce? I'm going to say that I think we do make the bear flag only because the market internals seem to be pointing that way. The breadth has been extremely weak on this move down. The advanced declines lines have been extremely weak on the move down until I see some sort of higher highs being made in the market, right? And at the same time seeing this ratio reading bump higher, right? And maybe move up into this area and have a couple good bullish days. I would have to say we have to say the bears are still winning. Without a doubt, right? We shall see. On behalf of myself and the entire ShadowTrader team in you-know-where, City of Brotherly Love, beautiful Philadelphia, Pennsylvania, and as always, up in the Windy City, all the good people in Chicago, Illinois, at you-know-where, Think or Swim, I wish you good trading and good night.